Ladies and gentlemen, you are connected to Talbros Automotive Components Limited Q4 FY25 earnings conference call. Please stay connected. The call will begin shortly. I repeat, ladies and gentlemen, you are connected to Talbros Automotive Components Limited Q4 FY25 earnings conference call. Please stay connected. The call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the Talbros Automotive Components Limited Q4 FY25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director. Thank you, and over to you, sir.
Yeah, thank you so much, and good afternoon, everybody. A very warm welcome to our earnings call for FY25. On the call, I'm joined by Mr. Naveen Juneja, our Director on the Board and Group CFO, and SGA, our Investor Relations Advisors. The results and the presentation are uploaded on the stock exchange and the company website. Let me begin with the industry and the economy overview. In FY25, the Indian automotive industry in the domestic market displayed a mixed performance with an overall volume growth of 6.5% only. Passenger vehicles grew at 4.9% YOY, while the two-wheeler segment grew by 7.7% YOY, and the three-wheeler segment registered a decent growth of 4.5%. Commercial vehicles sales remained subdued with a degrowth of 0.2% YOY, reflecting the ongoing weakness in the industrial activity and delayed public and private capital expenditures. The tractor industry experienced a relatively flattish year with a degrowth of about 1% year-on-year, driven by economic uncertainties and unpredictable weather patterns. Electric vehicles sales saw a robust growth, obviously on a smaller base, at about 17% year-on-year, with approximately 1.97 million units sold. Fresh product launches from manufacturers have fueled this upward trajectory, along with proactive government policies such as the PM E-Drive scheme, the PM E-Seva, and the Electric Mobility Promotion Scheme. Along with this, there is a major uptick in rural demand in this year. Two-wheelers in the rural markets grew by 8.4%. Three-wheelers grew at a higher 8.7% in the rural India, and even passenger vehicles gained at almost 8% in the rural belt. Now, coming to the company's performance, in FY25, Talbros demonstrated resilience and strategic discipline in the face of a challenging macroeconomic environment. Despite headwinds included subdued exports and a reduction in government infra spending, especially in the commercial segment size, our financial performance remained stable. The revenue for the company grew by 7% year-on-year. Through a strong focus on cost efficiency, operational discipline, productivity enhancements, we were able to deliver a 16% year-on-year improvement in EBITDA. Our EBITDA margin expanded by 130 basis points, reaching 17.4%, reflecting the company's ability to extract greater value from existing operations. Similarly, our PAT margins improved by 70 basis points to 11.2%. The fourth quarter of FY25 showed signs of modest growth, with revenues increasing by 2% only to 206 crores. EBITDA margins improved to 18.9%, an expansion of 180 basis points over the previous period, indicating continued momentum in our efficiency initiatives. PAT for the quarter grew by 17%, reaching 27 crores, further validating the effectiveness of our strategic focus on profitability. Our ability to secure new business has remained strong, reinforcing confidence in our products and capabilities. In FY25, we significantly built on our previous momentum by adding orders totaling to 1,475 crores. These orders were sourced from leading OEMs across both domestic and international markets, reflecting the continued trust and confidence placed in Talbros and its joint ventures. While fluctuation in market demand continue to pose challenges across the industry, TACL is committed to shifting from an acquisition focus of orders to efficient execution. The transition is crucial to translating our strong growth order pipeline into sustained revenue growth and long-term profitability. By strengthening execution capabilities and streamlining supply chain operations, we aim to maximize realization of these orders in the near to midterm. We've also received new orders from the heat shield segment of approximately 245 crores. The revenue from this segment has reached 51.6 crores with high margins, reflecting the effectiveness of our strategic initiatives. The gasket division accounted for approximately 53% of the company's consolidated revenue. We're also actively working on development of next-generation heat shields to meet the market demands. Looking ahead, our focus remains on expanding our value-added product portfolio within this division, and we're confident in sustaining the growth momentum. The forging division experienced a flat growth in FY25, primarily due to its significant dependence on exports to Europe. There is, as you know, a big slowdown in the passenger mobility in Europe, and we are predominantly a big supplier into these car OEMs into Europe. Also, I want to add here that a lot of our products in the European market and the UK market have gotten delayed. So the revenues are expected to come in in half H2 of last year will get postponed to maybe a few more quarters. But we've not lost any business, but only a delay in the product launches where our products will be fitted. Despite these headwinds, we delivered an EBITDA margin increase of 11% in EBITDA margins in the forging business line. In addition, even the U.S. tariffs uncertainty has played out in delay of a few businesses that had to get awarded from the U.S. market. Our joint ventures delivered a very strong performance, contributing consistently to both revenue and EBITDA. As a result, the group revenue reached 1261 CR in FY21. Our continued emphasis on operational efficiency within our JVs has led to margin improvements and strong financial performance. Going forward, we are committed to expanding our customer base, increasing our market share in India, as well as getting more and more global business. The global automotive industry is undergoing a profound transformation, particularly with an accelerated shift towards electric vehicles. In anticipation of this change, Talbros has made targeted investments in strategic alignments to expand its offerings in the EV segment. In FY25, we successfully secured EV-related contracts from leading OEMs across both domestic and export markets. Our collaboration with joint venture partners and strength of our forging business gives us a competitive advantage in supplying critical EV components, including lightweighting, structural parts, high-precision assemblies, and next-generation driveline solutions. These capabilities position us well to participate in the growth of the EV market both in India and global. With a very healthy order book, a growing presence in the EV segment, and an unwavering focus on execution excellence, we are well positioned to drive sustained growth, enhance stakeholder value, and lead to the next phase of the industry evolution. With this, I pass on the phone to Mr. Juneja, who will take you through the financial performance of the company. Thank you.
Thank you, Anuj. Good afternoon and a warm welcome to all the participants. Let me begin with the financial overview. Total revenue for FY25 stood at 845 crores as against 791 crores in FY24, which is a growth of 7% on YOY basis. And for Q4 of FY25, it stood at 211 crores as against 208 crores in Q4 of FY24, a relatively flattish growth of 2% on YOY basis. EBITDA for FY25 stood at 147 crore as against 127 crore, a growth of 16% on YOY basis. This highlights the company's cost optimization measures which are taking place in the company. For Q4 of FY25, it stood at 40 crores. EBITDA stood at 40 crores as compared to 36 crores in the same period last year, indicating a growth of 12% of YOY basis. EBITDA margin for FY25 stood at 17.4% as compared to 16.1% in the same period last year, higher by 130 basis points. And for Q4 of FY25, it stood at 18.9%, which is increased from 17.1% last year, higher by 180 basis points. PAT for FY25 stood at 94 crores as against 83 crores in FY24, a growth of 14% on YOY basis. This is after removing the exception item in FY24. For Q4 of FY25, my PAT stood at 27 crores as compared to 23 crores last year, a growth of 17% on YOY basis. Now coming to division-wise performance, in the gasket division, in FY25, sales for gasket division stood at 556 crores as against 515 crores in FY24, a growth of 8% on YOY basis. And in Q4 of FY25, our gasket and refill was 143 crores as against 133 crores in FY24. Q4 FY24, a growth of 7%. EBITDA for FY25 stood at 96 crores with a growth of 18% as compared to the same period last year. And in Q4 FY25, this segment saw EBITDA of 27 crores as against 24 crores, a growth of 13% on YOY basis. Now coming to the forging division, revenue in FY25 was 290 crores as against 277 crores in FY24, which has remained flattish primarily because of export demand being little subdued in European market, our major market for this division. In Q4 of FY25, the revenue of the division stood at 68 crores as against 75 crores in Q4 of FY24. Now coming to the EBITDA of the forging division stood at 52 crores in FY25 as against 47 crores in FY24, and it saw a growth of 11%. In Q4 of FY25, the EBITDA was 12 crores as compared to 13 crores on the same period last year. Now coming to Marelli Talbros Chassis Systems, revenue for FY25 stood at 285 crores as against 260 crores, a growth of 10%, and for Q4 FY25, it stood at 76 crores versus 71 crore in Q4 FY24, registering a growth of 8% on YOY basis. Now, EBITDA for FY25 of Marelli was rupees 50 crores, a growth of 28% on YOY basis, and in Q4 of FY25, EBITDA stood at rupees 14 crores as against 11 crores in Q4 of FY24, a growth of 28% on YOY basis. Now coming to our large joint venture, Talbros Margo Private Limited, revenue for Talbros Margo business in FY25 stood at 130 crores, which has shown a growth of 6% on YOY basis, and its repeat revenue in Q4 FY25 was 34 crores versus 31 crores in Q4 FY24, registering a growth of 10% on YOY basis. EBITDA stood at 17 crore in FY25 as against 9 crore in FY24, and for Q4 FY25 it was 4.4 crores as compared to 2.7 crores in Q4 of FY24, a growth of 63%. The company is committed to delivering outstanding value to its customer by offering high-quality products at competitive prices. It emphasizes excellence across all area of operation and prioritizes building strong collaboration relationship with its stakeholders. This is all from our side, and I would now like to open the floor to question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. I repeat, anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vijay Pandey from Nuvama. Please proceed.
Hi, sir. Thank you for taking my question. Sir, I have 2 questions. I wanted to check what will be our export. Now, basically, I wanted to understand the recent mandatory AC cabin that is coming. So, what is our expectation on how it will grow our segment? Because we are into gasket and heat shield. So, do we supply any kind of components here in this segment?
For the cabins, for the trucks.
Yes.
Yeah, we have just started supplying to Tata Motors. We have got the order of supplying heat shield in the cabin of Tata Motors.
Okay. So, can you just share what what is the potential order book you are looking, or how should we see the sales of this?
So we have received RFQ only. We are working on that. I can't comment on but with the amount and numbers, sorry. We just started now, and we have received the RFQ. We are expecting order very shortly, and we'll come back to you when the order comes. And likewise, we'll approach other customers, other Ashok Leyland and Mahindra also in this, Volvo, which are our regular customers in this.
Okay, sir. Thank you. And secondly, sir, I wanted to check about the exports market. So, are you seeing any revival of sort in Europe and North America market, especially in the European market? Because we have heard the news that European market is doing better than what was expected, partially because of lower base. But if you could just comment about the export market both in Europe and North America, how do you see?
Yep. Basically, first is European market. First of all, why I couldn't do much better in last year. Number one, in Marelli, my project was delayed by 1 year. Slant test order was delayed by 1 year because of the design change. Okay. Now design being finalized, everything done. Now we have the commercial billing will start from the third quarter of this year. So that is closed for us. Okay. It will show you in the third quarter onward, you can see the performance. Now coming to a forging division, of course, BMW schedule came down very heavily in the last 6 months because of excess inventory on one hand and because of the reduction in their order book. Okay. But now I think that inventory problem is resolved. Now we are normal inventory, and offtake has little bit improved by 5 to 10%. Okay. In that. And regard other businesses we are doing in UK, Jaguar Land Rover, it is, of course, sometime it goes up, come down, but we are seeing a growth of minimum 10 to 15% in this business next year. And third business is my JCB, which I'm talking big businesses. Okay. Third is JCB. JCB, of course, the last phase got developed in the last quarter, and the full impact we can see a growth of 30 to 35% in this business in the next year. So that is my position regarding major export businesses. You can see in the last quarter, in the full year, if you see, my export business has gone up to 27% on a overall basis. It was last 24, it was 25%, now it's 27%. I hope that by the end of next year, it should be around 29-30%, definitely.
So just one more thing. So on the this on the domestic side, any update if you can give on the what is your expectation for FY26?
So my expectation is 7 to 8%, not more than that, because you know that how the people are talking, how the OEM talking. Maruti says they will remain flattish. Even Cummins is saying they are minus 1%, but we anticipate that this year, because of the new orders we are going to get from Mahindra, from Kia Motors, from Ashok Leyland, my growth will be much better. In the domestic front, it should be 8 to 9%. I'm targeting on that.
And export around definitely double digit.
Yeah, 100%.
Okay. And so lastly, just this is last one. Then Marelli order book. So what is the order book and what is the time period in which we have to execute? This year,
Order book is this year they will start the slanted business on third quarter. From July, they will be supplying part to the Maruti EV vehicle. They are single source in that. So, which is now been, I think it is going to launch in June or July. The vehicle is going to launch. It is delayed by 9 to 10 months. Now it is going to launch. The supply is just, I think, under preparation. They are going to supply the part. We foresee that next year this business should grow by minimum 35 to 40%.
Third quarter of calendar year or third quarter of our fiscal year?
Calendar year. Our financial year.
Oh. Okay.
By October onwards. Okay. This Maruti supply will start from June, July, I think so.
Okay. ठीक है, thank you.
Thank you.
Thank you. The next question is from the line of Dipen Shah from Sixth Sense Venture. Please proceed.
Yeah, thank you for the question. Thank you for the opportunity. I just had one question. There was some newspaper report recently that Motherson is going to acquire the Marelli business globally. Could you just give us some insight whether it is anything related
We
to
can't
our
comment.
business?
Sir, we can't comment. Sir, we can't comment, but so it is anyway, it's not going to affect us anyway. That I can comment.
Yeah. We can't comment on this. Thank you.
Okay. Thank you so much.
Yeah.
Thank you. The next question is from the line of Yash Kukreja from Equity Capital. Please proceed.
Yeah, thank you so much for the opportunity, sir. Sir, could you help me with the capacity utilization for each segment? So, sir, this is in the sense like what is the peak revenue that we can do from each of the segments from the current facility, and what will it be after the commencement of the new facility?
Okay, just a minute. Let me give you the data for that capacity. Just a minute. Let me take out my sheet for that. Just a minute. Let me take out the paper. It is around 82% in gasket, and in forging, it is around in my forge shop, it is around 80%. It is 95% in my machine shop. In Marelli, it's 75%. In Margo Rubber, there are two divisions, anti-vibration and in anti-vibration, it is around 90%. In other is my hoses, it's around 85%. That is capacity.
Okay. And the peak revenue from the existing capacity and also from the new capacity?
So peak revenue, I can say, if I take the business-wise, in gasket, I can do around 575 to 580 easily. And in forging, I can do around, by adding a little bit machining, I can do around 325. Okay? In Marelli, with the capex going on, its capex is going on in this year, in major capexes. After that, I will be ready for approximately 600 crore per annum. And Margo, with the expansion, little bit capacity we are adding that, we should be around 175 plus.
Okay, got it, sir. And sir, what will be the EBITDA margin for the current fiscal? It will be around 16% only?
No, we expect now going forward, my EBITDA margin on, if all businesses together, should be around 16.75 up to 17%. Because my joint ventures are giving us good margins. Last year, Marelli improved its margin dramatically, and EBITDA margin improved dramatically. Similarly, in the case of Margo, it also improved.
So this will be including the other income?
Everything, yeah, in the same format I'm talking about.
Got it, sir. Okay. Thank you so much, sir.
Thank you.
Thank you. Before I take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please proceed.
Yeah, thank you for the opportunity, sir. Sir, just wanted to understand on the Tata Motors order side. So, like, I know it's still it is in the process, but can you just explain how much content per vehicle we are targeting, and how much product on the weight side we will going to deliver?
To very frank, I am not aware of that. I think the thing will be cleared in next 2 to 3 weeks, and we are there in July. If you meet us there, we can tell you the exact amount. I am not aware at this moment.
Okay, okay. Fine, sir. And also, just wanted to understand on the CV side, what are expectations in the upcoming quarter?
The CV is in the coming this quarter. CV is not that bad, by the way, not that bad, which we anticipated. I think it should be around the same. I think top line should be same as it was in fourth quarter. Around same.
Okay. So, sir, which are the segments we are expecting good support to our top line, two, three-wheeler or passenger vehicle?
We are expecting all division will grow, definitely. But I am hopeful that it will, whatever has happened last year, because election, etc., it followed. War, I think all is over now. So, of course, people are now adjusted to whatever is happening, except the UK and US and Europe duty, etc. They are, I don't know what will happen to them. It will be clear within 1 month or so. I think that we should be able to grow on a consolidated basis minimum 15% next year, definitely.
Okay. And sir, yeah.
But Marelli should grow much better. Marelli will grow much better. Best, I think it should grow by 35 to 40%. And 14 should also grow by 15% plus, definitely.
Okay, thank you, sir. And a lot of discussion on the Europe consolidation. So any visibility you are also seeing, sir?
Not really. Not really. We are not that big players, so I can't comment on that.
Okay. And sir, any impact because of US tariff we are seeing? Or any view on?
Tata Motor EV, my suspension goes there. Other EVs, we are in, basically we are export, basically we got the export order from UK. Their EV is not yet finalized because of some bad, I think some component issue they are facing. That's why they delayed the order. It's a huge order for our group. It's around 70 to 80 crore for order for our group. So we expect that the problem should be able to resolve the problem by the third quarter, and thereafter they said they will launch the vehicle. Let's see.
No, but I think our question was on something else. What is it on? On the US tariffs.
Yes.
No.
US and UK both. Yeah.
So US tariffs, I think it will only benefit India, to be honest with you. But there is a little bit of it's still going on, discussions are going on. But it will help eventually in the long term, I feel, with the whole China and the US taking a stand in each other. I think it will definitely help us. And we've not really heard much from our customers. There's any panic. It's business as usual for the US. UK may automotive really has no duty much, so it carries on, not a problem for auto components.
Okay, sure. Thank you so much.
Yeah.
Thank you. Before I take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Bhavya Shah from 3A Financial Services. Please.
Good afternoon, sir.
Yeah, good afternoon.
So my question is, what can you give me the number of capex we have done in this year and capex we are going to do in the next coming years?
Yeah, last year we did it on standalone basis. We did a capex of around 45 crores.
Okay.
And during the current year, we will do on standalone basis approximately capex around again 45 to 50 crore.
Okay. So by FY26, our entire capex of around 110 CR, which you have mentioned in the PPT, will be completed.
Yes.
Okay. And my question is that you have mentioned the order book of Kia and Hyundai of 13.5 CR, hit shield of 14 crore. So is this where we are in the like this order is completed or it will be completed in coming one?
No, Hyundai we are already supplying. Okay. Kia will complex. We will. I think all is done. We are discussing commercial, and I think the supply will start within a couple of months.
Oh, okay. And we can see that in FY24 our top 10 customers were Hero MotoCorp, Honda Motorcycle, and now they are not there. So what is the business at that side, Hero MotoCorp and Honda?
So we as you are aware, I think we sold our equity in our joint venture Nippon Leakless Talbros in 24 January. So that is the reason that we are not there. There was major players in Honda and Hero. So that is the reason.
Okay. And my last question is, this year we have seen the top line growth of 6% only, 7%. So are we intact to our FY27 target achievement?
So FY21 target, we are talking about 2,200 crore, out of which if we take out the LTL division, it is around 2,000 crore. We are quite hopeful that, of course, we will be delayed. Maybe because of the launches we have been delayed, like Sentis and Jaguar, Land Rover, etc. So we expect that there is delay of 6 to 9 months in achieving that goal. Top line.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Ravi Shah from VRS Capital. Please proceed.
Hi, sir. Am I audible?
Yeah, yes, sir.
Yeah. So I have two questions. The first one on exports. So we are targeted to reach our export share to 35%, which was 25% in FY23. So how is the global market conditions impacting this goal, and when do we expect to realize our goal, which we had planned?
To be very fair, but last year we did 27%, in spite of all these global issues, against 25. With the Sentis order coming in, its supply is going to come in picture from the end of the year, and the new orders we are expecting and new supply to JCB, etc. By 20, I think next year I think from 27 we should touch around 29 to 30, and after that we should after in FY27 I think we should be close to 33, 34 places. Definitely.
Understood, sir. Thank you. So my second question was that on the order book we had added around 2,400 crores. So what proportion is currently under execution, and when can we expect to realize the revenues? What's the time?
I think around 40 to 45% already started, 60% remaining. I think again 30% will start in next year, and balance will come after next year. Because of delay in the launches, that is all it is, and nothing else. Order intake is intact.
Got it. Thank you so much, sir, and all the best.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you so much for attending the conference today. I know last year was a bit of a tough year, but we're pretty positive and hopeful that this year will be much better than last financial year, and we'll continue to focus on growth and as well as margin expansion. Thank you. Thank you.
On behalf of Talbros Automotive Components Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.